I want you to picture for a moment exactly what your life would look like if you were a millionaire. The truth is, you would have a lot of the same concerns, consistently working hard to grow as a person and develop fruitful, loving relationships all around you. Your greatest concern in life would still be your health and the health of those around you. There would be one main difference though, and it's an important one. You would no longer have to worry about money. You would have the freedom to do what you wanted, when you wanted. You would have control. Financial freedom is the freedom to be able to make choices. The choices about what you do with your most precious resource, your time, who you spend it with, and where and what you do with it. I want you to open yourself up as we begin to talk about what it takes to become rich trading. Traders are often very concerned with how much money they can make and how quickly they can make it. And each day and each trading session is approached as almost the improbable or impossible. The reason I want to share this formula with you is because it's very important to have the correct mindset, the mindset of an investor. And it's important to focus on this formula for the bigger picture. And this is going to help you to be able to execute, which is what you need to do in order to achieve your goals. You need to be able to execute. So let's take a look. Starting with a $3,000 balance. How do you get there? How do you achieve your goals? Where are you starting from? If you're starting with just a $3,000 balance today, and you are committing to making for the next 5 years, regularly, yearly, another $3,000 deposit, what is that? Like $260 or so a month. Go ahead and take a look, and the rate of return. You know, holding Bitcoin, what do you think you could do? What do you think you could achieve yearly? What happens if you use something realistic? What happens if you use something like a 30% return over the next 5 years in Bitcoin? You're looking at taking a total deposit over 5 years, $18,000, and growing your account to $46,000. That's only over 5 year period, but it's also with a 30% return. I think that I personally expect to achieve over a 70% return annually in Bitcoin over the next, 10 years? Absolutely. So let's take a look at that. Let's make that 10 years, 70%. I think underestimating greatly over there. We'll see. We don't know. I think it's safe. I think it's safe to work out my plan using 70% expected return in Bitcoin over the next 10 years. And then you're taking that $33,000, you're turning it into $2 million. Now, $2 million is comfortable. You could basically buy whatever you want whenever you need it. You know, really very comfortable. But the thing is, when I first started doing this, I did this with 11 years. It was an 11-year plan with 3 halving events. And if you really want to plan this out correctly, starting today, you could go ahead over the next 11 years, expect to have 3 more halving events. Next one, it's every 210,000 blocks. Next one, estimate 20,024, 20,028, 20,032. But the thing is the bull market happens the year after the halving. So you're going to want to make this a 12-year plan, 70% annual return. Now you're looking, total deposits over those 12 years, $39,000, $3,000 a year. You're committing to this plan, to your investment plan. And then you're looking at, $5 million if we hit our expected 70%. Anything could happen. Understand your risk and what your risk is before you make any investment, and do not invest any more than you could afford to lose. But make sure you make calculated risks. Is this a calculated risk? Now, if there was just an 85% annual return in Bitcoin over the next 12 years, you would be looking at something, $15 million. That's from here on up. You go on borderline ridiculous for a 12-year plan. But 70%, 12 years, next 3 halvings. You're starting today. $5 million is rich. $2 million, you're definitely comfortable, no question about that. But $5 million, I would say that it's a great plan to have in place. I think it's foundational, fundamental, that anyone beginning before anything else should have this plan in place. And then you could go ahead and leverage different investments. CTM, what is going on, everyone? I hope you're all well and doing great. Good morning, good afternoon, good evening. I am so happy to be here with you. Borderline ridiculous. You know what? That was with an 85% year over year return, average return, compounding interest. If we look at it today, just buy and hold on Bitcoin, it's roughly about 50%. We're going to look at that in just a moment. In today's session, we're going to be covering DCA strategy, CTM positioning, market review, and bull market breakout. It's going to be a wonderful one. Rico Funk sold the dollar sign. Everyone, so glad to be here with you all today. Let's get going. I want to start this off by bringing up something very important here today. Let me do that. Let me bring it up onto the big screen. Let's go ahead and just put these down into a little bit later. We're going to be talking about DCA right now because we're going to be talking about, from CTM, this question over here. And it starts off, brother, I got a question, but not sure where to ask, and I trust your judgment. We recently sold our house, and I have a lot of cash. I'm buying spot Bitcoin to hold for 5+ years, keeping enough for a down payment, so don't worry about that. Not financial advice, but what would you do in my situation, right? Would you, number one, dollar cost average the full amount over like a 4-month period? Number two, would you buy Bitcoin with like 1/5 of the stack in case the bottom is in and it won't get lower prices and DCA the rest? Or number three, just buy Bitcoin, put it in cold storage, and forget about it. Maybe there's another way you would approach it. Again, I'm just curious what your train of thought would be as a strategy, knowing you could be wrong and not advising me. Of course, I am not a financial advisor. Nothing I say should be taken as financial advice, but we are here to go ahead and, wow, I didn't even know that. That's exciting news. I'm rooting for Brazil in this one. I'm so sorry. Lots of love, Sandra. But for sure, did I say Brazil? I meant Croatia. Let's take a look at this. And let's start off with each and every one of them. Let's look at first, about the first one is dollar cost averaging the full amount over like 4 months. And I imagine that you're picking the 4 months because if you were tracking previous cycles from the halving, which starts over here in this area, and then looking at this area over here, which is the next approximate halving of the miner's reward, you are looking at, in this area over here, at potentially being a sweet spot for accumulating Bitcoin, and then looking at coming into the halving, the potential front running of the halving, and then potentially even then 6 months after the halving, if previous cycles worked out in any way, shape, or form. So looking at something like a new all-time high. Now, this potentially lines up with the macro that's taking place right now as the Federal Reserve, as central banks are looking towards making a turn in their policy, working towards a lesser degree of rate hikes, getting towards the pivot, and that may or may not coincide, or we might actually see a major slowing down of the economy in 2023. We may actually see a greater recession, and we may actually see cutting of interest rates. It is a hope to get them down close to zero because they might need to come in and start quantitative easing again and buying securities. And the price of all risk assets, including Bitcoin, could obviously be substantially lower. So you don't know. That's the whole thing, is that you don't know, and that's critical and that's important. And that's the first one. And the reason I started today's session off was with the video, the dollar cost averaging video, the fundamental plan that everyone should have in place, because that really hits on number one. Number two, should I buy Bitcoin with like 1/5 of my stack in case the bottom's in? So as it turns out, we did the research, and if you're dollar cost averaging in on a monthly basis, on a weekly basis, why, you could see as I presented it, and that's making one gigantic assumption that we started it off with what happens if there was a 30% year over year return. And we looked at, if you did that for 12 years and you started with $3,000 and you did another $250 a month, you end up with something like $2 million, right? Now with a 70%, you're looking at something substantially higher, 5 million, right? And then we just looked at if that were an 85%, then it gets borderline ridiculous. Now, you don't know that you're going to have a 30% year over year return on Bitcoin because you don't know what's going to happen. As it is, though, except for the periods where Bitcoin was extremely overbought. So you're talking about very few periods, 2017, fourth quarter, right? You're looking at, let's say, late first quarter, 2021, unless you make a lump sum payment during those particular periods, it's actually more advantageous to make a lump sum payment into Bitcoin. That's assuming you had the cash. So in this particular instance, we're talking about you came into some money. You don't know whether you should dollar cost average. It does turn out that up until now, it's been a better move to actually, instead of dollar cost average in, just make a lump sum payment. Lots of people use the dollar cost average method because they don't have a lump sum payment. So every month they work towards saving that precious capital, $250 or whatever it might be, whether it's $50 or $5,000, depending on the individual, and then they dollar cost average that in. Now, number 3, do I just buy Bitcoin, put it in cold storage, and forget about it? I mean, is that first of all, right? If you are looking at making a purchase of Bitcoin, and obviously whether you're dollar cost averaging in, you should be, for this foundational strategy, in my opinion, taking self-custody of that Bitcoin and putting it into cold storage using multi-sig. You have to go ahead and protect this. By the greatest advantage of Bitcoin is having no counterparty risk. If you keep it on exchange, there's massive counterparty risk. So for all of these assumptions, let's assume that you are taking self-custody of Bitcoin. Now, here's the thing. You could buy Bitcoin and you could put it in cold storage. And if the bullish case for Bitcoin works out, that's going to work out really well. But you don't know. The truth of it is that you don't know. I do have some thoughts. You're wondering how I would approach it. Let's take a look at that together. And let me go ahead and push this down so we can have the screen free. And we're looking over here at long-term strategy, dollar cost averaging, right? And you could be looking at this from, I'm going to show you exactly how it works. This is what I would recommend because it takes out the question mark. It takes out the question mark, and it puts the power into your hand. It adds a plus. See the DCA plus sign? I'm going to show you what the plus sign is. It gives you a much greater probability of not only achieving, but exceeding the goals. Remember, the goal was 70%. That was the goal. We did the math off of 30% first. The goal is 70%. 85%, you saw it gets ridiculous. Let's even get ridiculous. Let's get ridiculous together for a moment, shall we? All right. So, Chio, you're set. You can't see the charts. Chio, are you all good now? I think you should be able to see the charts. It looks clear from my end. If at any point in time you enjoy being here, go ahead and smash the like button, especially if something clicks for you, if you learned something new. We got a strong and long session ahead of us. First, we're going to be talking about the DCA strategy. Next, we'll be talking about CTM positioning. Then we're going to be looking at the market review before we get into the bull market. All right, let's jump in over here and let's talk about the plus and let's talk about taking out question marks, right? This here, there you go, Chio. This here, we're looking at CTM. It's traded off the daily time frame, right? So buy side only, traded off the daily time frame. And instead of just dollar cost averaging into the market on a monthly basis, you are only entering the market when you get a signal. Right now, you're looking at all of 2022, right? So if you were following this strategy here, you would have had one trade. You would have took one trade in March, and that trade would end up losing you 3.7%. The rest of the year, starting in January 2022, let's do this on a monthly basis to make it easier. Instead of dollar cost averaging into Bitcoin, you would be dollar cost averaging into your cash account. So that $250 in January went into a cash account. In February, you added another $250. In March, you added $250. You took a buy trade, exited that buy trade for a loss of 3.7, and then the rest of the year, right? April, May, June, July, August, September, October, and November, and now in December, you have continued to dollar cost average $250 into your cash account, and you're on the sidelines that whole year. Now, if you were dollar cost averaging into Bitcoin that whole year, you are the whole time, as price goes down, lowering your overall average purchase price. But at the same time, you are not really preserving that precious capital. The price of your holding continues to go down and is off roughly 65-70% on the year. Now let's go ahead, let's take it back into 2021. In 2021, you had a few more trades. All the green instances is where you entered the market. When you're entering the market, if you're in a trade over here, for example, in February, you're already in a position. You're not dollar cost averaging into Bitcoin. You have the Bitcoin position, and you're dollar cost averaging on the sidelines into that cash. The next time you exit and enter, you're entering with your full position, which means that you exited here, right? Call it $59,000. You exited into cash, and then from May all the way through August, you were building your cash position and plus preserving the value of that cash position. So instead of holding it for that massive 50% drawdown, you're on the sidelines building that cash position, preserving that capital until it's time to deploy again. And you're talking about having a 64% return as opposed to if you would have bought and hold Bitcoin since 2021. What does that look like? What's the buy and hold? I don't know. Let's take a look at it. Down 46%. So would you rather be up 64% or down 46%? Obviously. So you can see where the plus and why the plus comes in. Let's go back even further now. Let's look at what it looks like to go back into 2020. All right. So let me go ahead and just jump over here and look at 2020 together. And you can see that's a 500% return, right? Compared to what? If you were buy and hold since January 1st, 2020, you would have been up 110%, right? So now if you're looking to achieve, right, to take the question mark out of the equation as best you can, nothing is a given. What's the better thing to do? If you're looking at 3 years, 500%, you do the math. Are we achieving the 70% and after taxes? Yes. Are we exceeding it? Yes. Are you doing that buy and hold? Hey, you're still up. What, you're averaging about 35% a year? You're averaging about 35% a year buying hold. Hey, guess what? I think that over the 12 years, you're going to get it done. Now, I don't know that you're going to get it done at the 70% rate. Do I think you're going to get it done at the 30% rate? Yeah, I think that we started off saying that we think that that's achievable. Now, what are you looking to do during that 12 years? Are you looking to make it out on the other end, the bare minimum? Or are you looking to work, like, do something extraordinary? Do you have the tools in place to do something extraordinary? Look, not financial advice. That's exactly how I would go about it because I think it offers you a much greater edge than simply going ahead and putting that into cold storage, then going ahead and just dollar cost averaging from here. We don't know. We are in unprecedented times. We don't know what the next decade is going to look like. We don't know what next year is going to look like. It's a lot different circumstances than we were dealing with 4 years ago, before and coming up while we were calling the bottom of Bitcoin exactly 4 years ago, and then looking a couple of years later for that massive accumulation before the next halving. The financial question marks you could have, and that way, regardless of what happens, you're putting yourself into a position of power. That's the way that I think that you should go about it or look into. Let's go over a little CTM 2.0 positioning, and we'll start over here. We're going to jump back into, by the way, right? That also, the beauty of that is when the strategy has you out of the market, capital is preserved. That's not happening under a normal dollar cost averaging strategy. You're not preserving capital and building it up, right? You dollar cost averaged into the reserves instead of directly into Bitcoin, waiting to deploy it on the next. For some people, it does work on both the buy and sell side. It's more profitable if you're trading off both the buy and sell side on the daily time frame. But buy side only, spot only, more than enough to get it done. Let's take a look. CTM positioning. We are looking at Bitcoin entering a new buy position. That buy position, this is done on the 8-hour time frame, is currently 0.4% into unrealized loss. On Ethereum, the current open position, right, has come back to break even. It is currently 0.1% into profit, right? So back to entry. We're looking over here at Cardano being on the sidelines for all of 2022 on the buy side. And can you imagine holding. GBTC, we are looking exactly one trade, one potential entry the whole year of 2022. And on the sidelines, preserving capital the whole way. The premium continues to come off. It has come off another 0.6%, 0.7%. We continue to watch and compare that to trading GBTC off of CTM 2.0 style. And on the buy and sell side, since we are in buy positions, it's the same thing. But Cardano, the beautiful dance between the three continues. Cardano is currently holding a short position. So you can see how the three are hedged. The portfolio is hedged. Bitcoin, Ethereum are on the buy side. Cardano over here just took a short position. It's currently holding a loss of 1.3%. Now, let's jump over. Let's keep going. Let's get into the market review. Boom. Let me pull that up over here. Let's go ahead and market review. I'm starting and looking at first the dollar, King Dollar, and this chart here is getting a little bit noisy. I like simple and clean. Nevertheless, continues to provide massive signals. I'm not going to clean it up. I'm going to keep looking at it as it is. Let me jump down to the 8-hour time frame, and I just want you to know one thing, that we are watching this line over here. I'm going to highlight the line yellow. That is the line of resistance, and below this, it is currently very strongly, let's say, positions toward the sellers. Getting back above that line would make this more neutral, and we're still waiting for any type of sell impulse in order for buyers try to repair the damage that has been done. What's really interesting about the dollar is that throughout 2022, you're looking at the dollar, 2022, that's the 17th. Let's go back towards the beginning of the year. You're looking at the dollar up almost 9%. It's also off almost 9% from the high in this year. And throughout 2022, we saw as the dollar bulls, as King Dollar was running and running hard, lots of people getting on board, embracing milkshake theory towards the top. Right? Remember, there's nothing between here and 120. Talking about opposing opinions was not encouraged. It always needs to be encouraged. We always need to take a look at both sides. Right now, we have a very negative bias, right? We've seen ever since this level broke, I'm going to call it 105, right in that area, 105.8, this trend line over here. If you zoom out, you can see that. Let me zoom out all the way. You can see that I'm looking at the prime trend line is not up here. The prime trend line that I put in is, I don't know where I first made it. It was down off the bottom somewhere. But what's really interesting, you clone it all the way up. And this is what provided the top so far in 2022. Now, again, unprecedented times. I think that anyone who's trying to make any long-term calls here is not understanding the dynamics of what's taking place across markets and the macro as monetary reset is underway. I am and continue to be data dependent. I would not be surprised if at any point in time, don't forget, the Fed is still tightening. the Fed is moving from really focusing in on inflationary pressure to watching what the job market looks like and the prices of wages. They're telegraphing to us what is becoming the most important thing. We could look at potentially energy. Let's look at oil, right? Let me hold on one second. Let me come back over here and just say that we have on the dollar this continued negative bias ever since that breakdown and losing that level. We had sell impulses taking place over here, and then we became what it was just mean reversion, a reversion to the mean, and we were neutral. Below here, it started opening up much more negative bias. Are we targeting down over here in this area? As long as we stay below this line over here that's being highlighted, I think it's probable that we test the bottom portion of the range. Now, if we break back above this area of highlighted resistance, we're back more neutral. That would make a lot of sense as the Fed hikes next week, but we will see what the market's reaction. The Bank of Canada hiked 50 basis points this week, and the reaction wasn't what a lot of people thought it would be. And often, if you go back 4 years ago, when the Fed hiked 50 basis points, that's when risk bottomed. Risk did not wait for the Fed to say, okay, we're pivoting to a pause. Risk bottomed on the rate hike because the market in that moment correctly perceived that as being the last rate hike of the cycle. Now, I don't know if next week's rate hike is going to be the last hike of the cycle or not. Likely there's a hike coming in February. Whether that's 50 basis points, 25 basis points, I don't have any idea, nor should anyone, as we are truly data dependent about what happens going forward. But oil, we were talking about oil briefly, and we've seen this week a major breakdown. I'll start looking at on the weekly time frame, and then I want you to point out that we are seeing over here below, this is where the war started, oil being able to hold this trend line, tested it here back in November, but holding this trend line all the way. I'm sorry. What did I say? The war broke out over here? No, the war broke out a year later in March of 2022. So sorry about that. A big mistake. Big mistake. War broke out over here, and during it, it held the upper long of this megaphone trend line the whole time up until we saw that breakdown. But ever since March of 2021 on a weekly basis, we've held this trend line. Right? Just like dollar bulls were not open for any type of conversation, oil bulls going back into the spring, they were looking at oil going significantly higher, not open to any conversation. Sell impulse now reaching what was the target, but now it's breaking below it on a weekly basis. That makes oil with a very negative flare to it, let's say. We could expect now looking at some horizontal support where we could be looking somewhere around, I guess, $58 a barrel would be the next logical target. Now, what's interesting about oil right now, specifically as we're looking at the zero COVID policy taking place on China, this is a great place, this area, to manage your risk off of. Close below, continuing to open up new sell positions if you took profit over here. That seems like a smart thing, because you know where you're wrong, you know where you could get out of it. I have this downward sloping green line over here right now, getting it back above this area of resistance and breaking outside of over here. That opens up a place to go long on oil, and long oil could actually become a thing in 2023 if indeed China does create more demand through opening up. At that point in time, that could put further pressure on central banks if you were to see inflation, which seems to be, I mean, we did have core PPI rising today, but if we do see inflation coming off, which it has, but if it could in 2023 go back the other way very quickly. That could mean that the current tightening cycle has a longer way to go than many people expect. Even if that turn is beginning to happen, a lesser degree of rate hikes. It's why instead of just coming up with some type of idea, who knows what happens next, These are unprecedented times. Let's just take it as it comes and stay in front of it. If you're looking at the S&P 500, it's been quite an interesting week. Lots of people on the sell impulse were looking to go ahead and say, all right, we rejected a major trend line over here. We rejected a major trend line. And then we had the sell impulse. I am taking that sell impulse. We're going back toward the lows. Prior to the sell impulse, we said, no, we have horizontal support over here. It's a sell impulse, but we'll just stay on the sidelines, wait what happens. We are neutral in no man's land. It's a breakout above this trend line or a breakdown below this horizontal line of support that will open up the next move either up and or down, and I don't know which way it's going to go. Let's take a look at some fun stuff here on this fun Friday. Let's move over now and look at a bull market breakout and enter into some really fun analysis. Before we do that, let's drop some head snack.
Markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing, just to pretend they're in fashion. See the like button, comments, and smash it. Boom, boom, Jordan in the room. Grab the bull by the horns and to the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
It's a taco day. It's a taco day.
All right, snack. Head snack's been dollar cost averaging. Head snack has been dollar cost averaging into, I think starting in the spring, somewhere around April, May, June. And for the first time in his life, he's building up a Bitcoin position. Now, my goal is to get head snack into the DCA plus. So I'm going to be, maybe I'll share this video with him and get him into it for sure. Clarification, right? The last buy occurring in this zone over here, Craig, over the 25th of March. And then ever since then, if we get a buy on 12/25, right? Do you deploy 9 months of capital, right? So, Craig, this whole year or this whole time you're in gray here, you're dollar cost averaging into cash instead of dollar cost average into Bitcoin. When you get the buy signal, you deploy your entire account and then you exit your entire account on the exit signal. The rest of the time you're deploying capital, dollar cost averaging instead of Bitcoin into your cash account. On the next buy signal, you deploy the entire account. Oh my God. Everyone, thank you for that. Really appreciate that. If you are enjoying it, smash the like button so that we get and continue to be fired up. All right, let's talk a little bit about bull market breakout on Bitcoin, and we're going to be talking about this in detail. So let's get into it. And right now, we're looking at a few things happening ever since, I'll call this the Scammy Sam FTX low, and we are seeing a series of higher highs. Jordan, those are higher lows, right? A series of higher lows, and at the same time, we're seeing one rejection and two rejection of this resistance. This point over here where price is currently being rejected is so interesting to me. I call it the previous cycle ceiling. If you zoom out with me really quick, you can see that if you come back into the last bull market high, that prior to these few days here, these 3 days of price action where price hit the all-time high back then, call it 19,600, whatever broker you're using, you could saw that price over here was finding resistance. And then after 1-2 touches, found resistance again. This is the previous cycle ceiling, and you could see that affirmed and confirmed over here as we broke out into the bull market, as the bull of all bulls began running late 2020. You could see that as price, remember price breaking out of the bull market, right? And then that test, that blue box, everyone was holding their breath. Is it going to be a successful retest, and are we resuming out or not? And then the bull ran, and it ran so hard. And then most people coming from traditional markets were like ready to take profits. And it was no, it's not the time to take profits. This thing is just getting going. You got to hold here. Price broke above, retested, tested again twice, testing that level, confirming that resistance of the ceiling into support, and then the bull of all bulls ran up for the next legs. That level is so important, and you could see that level is where we saw the 3 arrows Celsius collapse into. And again, it was once again confirmed into support, and potentially, I don't know what happens in 2023. I don't know whether or not we enter a slowdown or we see more of what we saw over the last 6 months, where the economy is a lot more resilient than people imagined. Third quarter GDP, pretty good. Fourth quarter GDP, pretty good. Now we're seeing the job layoffs, right? But we're also seeing, for a segment of the population, we're seeing wages continuing to grow. So the wage rate continuing to grow. That's what the Fed's concerned about. We could continue in tightening and stay elevated for longer than people imagined. Or we could see that the slowdown is coming quicker, and we could see the Fed, even though they're talking the talk that they're going to like to keep rates elevated, we could see them unwind them a lot quicker than the market is even pricing right now. We don't know what the market's reaction is going to be in 2023. It is unprecedented times, and it is data dependent, but there is a potential. It could have been over here, the bear market low, if we did not see the collapse of FTX. And the collapse of FTX took price underneath the previous cycle ceiling low. And that's just a reality. And I'm not saying, and I have no idea what happens in 2023. We could potentially enter a greater recession, and we could also take out lower lows, or we could also see actually next week, FOMC, Fed come out with a 50 basis point hike. We could then see that as the turn towards the pause, the heightening cycle has peaked. We could see risk bottom, and we could see risk go on to run. And I don't know when we enter, and if we enter a recession, whether or not we take out the current lows on risk. Nobody knows those things. And anyone trying to put out any type of thesis as if they do is either wrong or they're right. There's no other way about it. But either which way, that's not the best way to go about trying to trade the markets and stay on the right side. I continue to be data dependent and watch the technicals. What are the technicals showing me right now? Now that we understand the importance of that previous cycle ceiling, right? And we could see that price, look on the daily basis. Earlier, price was not able to close above it, right? I have a confluence of lines over here also. We're going to look at this next. This trend line over here, this underbelly trend line, we're going to look at that next. By the way, if FTX did not implode, here's this bar right over here, this breakdown of this trend line. This is Binance is going to potentially bail out FTX. And then boom. And then, oh, that's required on us doing due diligence. Right? And, if that didn't happen, likely this was the low for now. And we were breaking out of this descending wedge, and we would be up here somewhere. Bitcoin would be up here somewhere. Scammy Sam, Mr. Wonderful, thank you so very much. Here we are now, though, and we saw a rejection of this confluence of resistance. Price came down. It tested the trend line. Here, I'll show you on the 2-hour time frame. You can see price rejected, comes down and tests this trend line again. It's a successful test. Price coming back up into this area again. It is again rejected into this resistance, and this remains price where price is right now. It's between the ceiling and it's between this trend line support. If price breaks down this trend line support, likely we're coming to test somewhere around 16,000 or the yearly low. That could happen next week with an ultra hot CPI. It could happen at any time between now and then, or it could happen when the Fed raises rates next week. It's very much in play. Or price could close above the ceiling. Price closes above the ceiling, and that's a major repair that has taken place. A major technical repair. And also notice, because I'm going to talk about this next, that this underbelly line will have been pierced. Okay? Remember underbelly line. I'm going to show that to you last and the significance of it. But if price closes above the ceiling, at that point, we have a major technical repair. What's next? Next, we'll be looking at, by the way, a close above here. Obviously, Jordan, well, there's a little bit of resistance over here in this area. Yep, we'll talk about that too in a second. Close above, that's a buy signal. What's the invalidation? If you have a buy signal close above, what's the invalidation? That's very easy. It's the breakdown of this trend line. Price closes here, breaks down below this trend line, wherever it's sloping at the time. That's an invalidation, right? Now, could I use the low over here? That's what I did in the Twitter thread, right? Yes, you can. You could just say, or keep it like easy for most. 16,700, the level I gave. A breakdown below that after closing above, well, that's an invalidation. What do you mean? You do not have a crystal ball and you cannot tell me when exactly the bull market breakout has occurred? Nope. It's all about managing risk, right? A close above the ceiling, that's a good place for the way that we're going to view this in a second to say that they're potentially aligning the fundamentals. What are the fundamentals? Fundamentals are FTX blowing up, takes us below the ceiling. Price can't sustain itself below the ceiling. It's able to come back above. Fundamentals. Technicals. We just looked at the technicals of it, right? What about the macro? The Fed and central banks around the world looking to make a potential turn towards a pause. That's macro, technicals, fundamentals all lining up. But you're wrong if price closes below 16,700 after getting a close below, and it's just not happening. Secondary confirmation, if you get a close above the ceiling, is going to be when price breaks above this trend line and it is able to make that repair. That's just a secondary confirmation that indeed there's further proof that the ceiling, the close above the ceiling, now has legs to it and price is able to make that secondary confirmation. But the true confirmation, that is going to be on a log scale, a break above the all-time high on Bitcoin, a break above the April high on Bitcoin, and price clearing that along with, this is the Luna low. This over here is after the 3 hours Celsius test of the previous ceiling, and then bounce. You can see the Luna low and the bounce, that's where they come into. So you have a horizontal level with the true confirmation, a confluence right over there. Price breaking above both. And that, my friends, would be the true confirmation. And that does not mean at that point in time that it's off to new all-time highs. If you remember what happened in the previous bear market low, we saw a move over a 6-month period from $3,200 to $14,000 before price rolled over again. Now, price wound up testing that 3,200 level again because of the global lockdowns. But nevertheless, a break above here is just putting in, let's call it an intermediate low. I don't know what happens in 2023. Let's continue looking at that, and let's look at that. Remember over here? This is that breakout that I'm talking about. This was the breakout, the retest, bull market began. This is indeed the full confirmation of the bull market, the bull of bull. We called it live on a live stream the morning it happened. Many of you were here. Many of you remember that. We called it live. Like, many people had no idea what was going on at that particular time. Soon after, many became experts. Now, this line might happen again. And this line is not this line, right? Because we might see some type of front running of the halving. We might see some like euphoric behavior on risk, on the Fed actually pivoting to a pause. And by the way, when the Fed pivots to a pause, if risk doesn't continue to rally, but risk falls off a cliff, that's bad news bears. We don't know what's going to happen. But let's assume that price comes up to here, to like in this area. At that point, we will be readjusting that trend line off of that pre-halving high, we'll call it, and then we'll find out what the true breakout of the bull market is to be able to confirm it much in this style. Now, we're looking down over here in this area right now, right? And I want you to focus on CTM 1.0 trend line. That's definitely the breakout over here. We're watching something like this. This is an underbelly. Do you see this underbelly that's occurring right over here? That's the underbelly. And a break above there. You can see the resistance, breakout above. Let me zoom in a little bit, right? And then retest, resumption. This is a true confirmation that the low is in over here. Let's look at that also, what occurred back in 2014 into 2015. Now, I think this is a glitch. If you look at Brave New Coin Index, if you look at Bitstamp, this doesn't exist over here. It's on TradingView's all-time index. Nevertheless, let's look at that underbelly. Here's an underbelly line. You see that price getting above it. It retested it. Right, let me zoom in a little bit. Let me make sure you see price breaking and closing above it, retest it, and it winds up holding. Here's another underbelly I put, looking off of this close over here. Price wicks down over here, but the closes are over here in this area. And you can see that price closed above it here, but after finally able to get above it, I didn't mean to move that line. After getting to move, and it's never easy. Don't think that this game is easy. It takes lots of work. Here's a price above, right? And then a retest, another retest. Was that a close below? Maybe. Another retest, and it holds that underbelly line. Here's the underbelly line. Oh, let me zoom out. Hold on one second. Let me retrace with you. This one is the most important. I wanted to add it in with you, right? You can see this. I'm connecting these 2 points over here. I'm zooming them down over here, right? Let me just get it exact. Let me get it exact, or exact as I can, right? By the way, my eyes are focused right there. What happened here after, I was focused right there, so I could see that this is the real underbelly. This was the line of the 2018 bear market. And you can see that breakdown below, retest, breaks out above, retest, resumption off. Here's the confirmation right over there. This is the place where you could call with confidence a bear market low. And it doesn't mean the low was in. It could have failed, right? But that is right there. That's some beautiful TA. And we have something very similar going on right now in real time. We have something here's the underbelly line right over here. That's the line that we're looking at when I talk about the ceiling coincide with it, right? A breakout above, likely point of the bull market breakout. Now, it doesn't mean there aren't massive areas of resistance above. Here's another underbelly line. That's not included when I was looking at this with y'all. Here's that underbelly line, though, that we're currently being rejected at. But let me show you this one over here. We have this underbelly line over here, which is going to provide resistance. It's round right now coming in 23,400. And then we have another big area underbelly line of resistance that's coming in right now around 27,300. So it's not like it's a walk in the park, but I hope that brings you massive clarity about where we are structurally right now, because it's crazy out there and nobody knows, and we don't know. We don't need to know. We got TA to show us the way. By the way, better than that, and all of that beautifully exhibited TA, you could just follow daily long-term Bitcoin dollar cost average plus and do it a lot more efficient and a lot better. Look at that. Look where it picks the bottom, where we went through all of that work to pick the bottom. Exiting over here, right? Oh, okay. Start accumulating. Oh, wait, global lockdowns out on the sidelines. No guessing. Bull market breakout, I'm involved. Here comes that retest. Well, I'll get on the sideline. Bull market breakout, boom. Look at, so there we go. Boom, 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 boom. Gio, what do I think about Binance US? I'm very skeptical. I don't know. I feel like I've been a big fan of Binance for a long time, regardless of what people think of ZZ. I felt like he's building a good business, but there's lots of red flags. I'm not really sure. Right now, I don't trust anyone, as you know or know that, I mean, look, they just opened up this week free trading on Ethereum. It's probably a very good business decision during the bear market. Instead of looking to make money, they're looking to grow their clientele base. And that way, during the next bull market, they just continue to extend their leadership. That's probably what's happening. Now, maybe it's for different reasons, and maybe they need deposits. I'm not really sure what's going on. They have a good history of doing right by their clients, whether or not it was a previous API hack, whether or not it was the $250 million hack. I don't know, though, and that's the whole thing. I personally, you have to be very cautious, and you cannot, especially a third-party exchange, quote-unquote, trust anyone. Now, there's a lot of people who have good faith in Binance that likely or could be warranted. I personally am leaning towards the CME, the solutions that we've put in with the CME. That brings this up over here. Let me go ahead and talk about it. I didn't plan on it, but I will, right? Jordan, love your work. Questions, please. I may invest, sir. For CTM 2.0 buy and sell side on the making money on the way down part, I want to do my taxes right, and I go through TaxBit to organize it all, right? Me, as a U.S. resident, are you sharing legal ways to make money on the way down? Like with no VPN while trading, I just want to not have the tax man on me. Thank you. Look, my buy side only, spot only is encouraged in CTM as being more than enough. When I say more than enough, I mean to achieve those foundational goals. What we did at the beginning of this episode over here is what is needed to achieve that foundational goal in place. That's buy side only, spot only. Now, you all know what could be done CTM 2.0 with lightly leveraged. When we talk about lightly leveraged, we're talking here about like 1.15 times leverage. And the returns are absolutely ridiculous. We all know. We're not talking about that. We're talking about buy side only, spot only. Those who are able to trade both sides, it is more profitable. Whether you're doing that CTM 2.0 on the 8-hour time frame on Ethereum, on a portfolio of Ethereum, Cardano, Bitcoin, or you're doing that on the daily time frame on the buy and sell side, the both sides are even more profitable. But the use of a VPN to access an exchange that is out of jurisdiction is discouraged within CTM. Exchanges already offer third-party risk, and this increases your risk. We are here to make money over the long term in a methodical, calculated way, trying our best to minimize risk. In the US, it's perfectly legal to trade CME futures on both sides. That's a real solution. That's a solution that we're working hard at, at really developing, working out, dotting the I's, crossing the T's, because for me, I feel more comfortable with, let's call it a quote-unquote traditional broker, whether it's TradeStation, Interactive Brokers, trading through the CME, Futures Exchange. There's risk everywhere. There's risk with that, but we're trying to minimize our risk as best we can. Everyone, because we don't share, because we're private. That's why. That's why, at least, because we're private, and you know, But it's all good. You're here. And that's all that matters. Are the settings the same with the DCA Plus only using the daily time frame? The settings, JF, you just go into the dashboard, go into from the dashboard, right? You could find do that right now. You could find over here long-term number 5 DCA strategy on this course module where it's explaining them. You could click on the buy side, buy and sell side. You have shared templates along with the settings. That's what you want to do. Everyone. That was all blanked out for you. I didn't mean that. Let me hold on one second and jump down over here. Right? You want to jump into from the dashboard, CTM Essentials. Jump down over here. Come down to point number 5. Right? Long-term dollar cost average plus. And you have the buy and sell side templates. This course module gives the explanation. Buy side, buy and sell side. That's going to give you the share templates with the settings. Everyone, Francisco, have a beautiful weekend, everyone. I'll see you all on Monday, and we'll continue putting the work in, making sure whatever happens in these unprecedented times, we're here together to thrive. God bless you all. Have a wonderful weekend.